but let's get talking about a couple of numbers. We have Caplin Point, which is in focus. In fact, it did come out with its numbers on Friday. It did see a steady revenue growth in Q3 of around 17%, and the margins also were quite steady state this time round. We do have the management with us. We have Mr. Vivek Partheeban, who is the COO of the company, joining in. Vivek, hi. Thanks very much for taking the time out. Well, I'm going to start with the 17% growth. Can you break up the growth between the Latin American region, which is around 83% of your sales, and US, which is now 17% of your sales?
Yeah. So obviously, Latin America continues to be our mainstay, and what we've given guidance in the past as well, because we're coming off a larger base right now, that we'll be looking at around 11 to 13% kind of growth in the Latin American business. US obviously is one of the areas that is growing much faster for us, especially coming off of a smaller base. So in the US, we're at about 40% kind of growth at this point, and we continue to see similar kind of numbers for the next 18 months.
So what would these similar set of numbers be for the US? Can you just tell us what is the kind of growth that we could probably expect in Q4 and go into FY25 as well?
Yeah. On a consolidated level, we are looking at early teens kind of growth for the overall company. But US, as I said, off a lower base, we can expect somewhere between 40 to 50% kind of growth for this year, which is what we've given out in the past as well.
All right, so 40 to 50% growth coming in for the US this year. We'll speak about the FY25 numbers as well, whether that sustains or not. But, the non-US other markets that you have, which are Mexico, Chile, Colombia, LATAM, you've been pretty positive on growth prospects there as well. How much do they account for in your overall sales right now? What are the growth prospects there? How much will they be in your overall contribution going forward?
Yeah. So obviously, we have three levers of growth, I would say, at this point. Number one is the US of a smaller base, as we spoke about. But of course, we are slowly starting to mature a little bit in the US at this point. But the two other levers of growth, I would say, would be the larger markets of Latin America, such as Mexico, Chile, etc., and the existing smaller businesses as well, so smaller markets as well. So I think overall, going forward in the next 18-24 months, you will start to see Mexico and Chile and all that occupying a slightly bigger chunk of our revenues. As always with pharmaceuticals, you need to expect certain amount of gestation period, because every product approval takes about 12 to 15 months, So we are consolidating right now, but I think 25 and beyond, you can start to see a fair uptick on some of these numbers as well.
So if we just had to look at your revenue composition in FY25, what would it look like in terms of geographies? How much would come from the US? How much of it would come from LATAM? How much of it would come from Mexico? What does the geographical contribution of your revenue look like?
Yeah, so by and large, we look at it as North America and South America at this point. So when it comes to South America, we are at about 80 to 83%. And North America is about 16-17% at this point. We see this trend continuing for another year or so, and we will see. I think 25 and beyond, we can start to see a little bit more, percentage occupation from the US side.
Okay. Now, just wanted to come back to FY25 growth. You said you're expecting early teens growth in terms of FY25 on a consolidated basis. Okay.
That's
now,
right,
in terms of Caplin Steriles, when we talk about Caplin Steriles, how much of it is, coming in from the US within that segment? Can you just explain that to us?
Yeah, Caplin Steriles is almost entirely US. At this point,
Okay.
I would say probably 95-96% US. So that is basically a regulated market injectable company.
All right. And that grew 40%. So majority of your growth for the US is coming in from Caplin Steriles. That's what's driving growth. So what are the new launches that we can expect when it comes to this injectable segment?
Yeah, in the next 4 or 5 months, we're expecting about 4 product approvals. And interestingly, all these are going to be in the ophthalmic space, which is also a sterile product, right? So this is something new to us, and it's also a line that is largely underutilized for us. So we can expect the existing B2B business to grow, which is more institutional, because all of the injectables go into hospitals and through larger and smaller tenders. And when it comes to The ophthalmics, it goes through retail. So we need to have a little bit different structure, kind of sales strategy for that. But it'll be interesting to see because this is the first time we're actually getting into ophthalmic space in the US.
You know, one of the big triggers for you from a stock market investment standpoint was some sort of value unlocking or getting a strategic investor in the Caplin Steriles business itself. And you've not shied away from saying that you will look at something like this in the future. What's the update on that right now? I mean, are you looking at some funding for Caplin Steriles?
No, we're not looking for funding. In fact, the larger question that we keep getting asked is what are we doing with the 800 plus crores of cash that we have on our which is, I'm sure that question was coming anyway. But we are pretty much, past the midway point when it comes to our CapEx. We probably have another 12, 15 months of CapEx to be completed. And once this happens, I think we can start to see some of those assets being put to use, When it comes to raising funds, I think we're not in the market for anything like that. But what we are on the lookout for is we have a stockpile of cash right now. And there are certain segments of the market where we're not present. So without giving too much away, because we're at very, very early stages of evaluation, we're not against anything inorganic. That's what I would like to leave.
Okay, all right. Well, that's on your cash utilization. I just had a quick question with regards to a particular approval that you got from the US, OTIC. I think it's a year drop that you've received approval for, and you're planning to launch it. What is the potential from that, and is that going to be the focus for you? Ophthalmics, injectables, more sterile products where you don't have that much price competition? And if you could detail the kind of price pressure that you're seeing within this space, if any.
Yeah. Obviously, when it comes to sterile products, injectables, ophthalmics, and even otics and stuff, I think you will see that the competition pressure is a little bit better than OSD, oral solid dosages. Having said that, I think pricing has largely stabilized. And for a entry-level player like us in the US, we don't really focus too much on pricing pressure because we already have a fairly decent hold on the cost structure for us. Going forward, we will also be adding to this basket with our oncology portfolio. So we want to be one of the go-to providers in the market for sterile products. So that's probably still about 1.5 years away. But I would say that all three of them are a focus: injectables, oncology, and ophthalmic space for the US.
All right, Vivek, thank you so much for joining in and giving us all the views coming in on this year, most importantly, the year going forward, and how your geography pans out when we speak about LATAM and the US as well.